Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 13th of September, 2021. So we look at the markets, and they're all getting ready tomorrow for the CPI number. That's going to be the big event of the day. Traders will want to see what that does. We saw Antony Blinken get drilled today, if you call it that, in front of the House. I think that'll be a little rougher in front of the Senate. I hope it is. I think there's more questions to be answered and what went on there. We've got to be talking still about COVID, unfortunately. The question is, has it peaked or not? We'll be looking at that. We see that the New York school system is open, so you've got massive amount of children going back. The question, of course, another storm coming in from Mexico, and I'm talking a physical storm, another big one. And this one's going to be a rain event, not so much a wind event, but it's going to hit Houston, it's going to hit parts of Louisiana, it's going to dump a massive amount of rain. What's that going to do to the refineries, the oil, the platform? So there's still plenty of problems going on there. So let's go to the market and look at ARK. I was just watching Kathy Woods getting her interview, and you could see the market's been falling back rather sharply on her. The market's got lower highs, lower lows. I admired her today saying, you know, you always got to pick what you want to do, and I was listening to that, and then she said, you got to find a way to be measured. And she said, we have not done as well this year as we did last year. Then she covered it by saying they have a 5-year frame of time. Well, okay, if that's what it is, investors won't wait 5 years if they're losing 30, 40% of their money. You might think they will. That's only in the text room. It doesn't work that way unless you get these market crashes where there is nowhere to hide. And then you're better off leaving your money there. But when you get a market that's going up, you're measured against your peers. You should know that. Lower highs, lower lows, trend is clearly down. The market's down to the first key supports, the 18 and the 100-day average of closes. In order to break the downtrend, you got to get back over 123.47. So if this gives ground, the next stopping zone could be here at the 114.47 level, which we'll call the lower Bollinger Band, and momentum down. In other words, we're not even close to being oversold. So this market's in a bear trend. There's more on the downside if it wants to do that. Rallies will be probably restrained or attempted to be at 120.72. Then Apple tomorrow. That's another big event. We're going to see what the phones are and so on. I have an Apple phone, and I happen to be fortunate and read today there's a big update that they want you to do right away. And it has to do that apparently a company out of Israel that sells a type of software to only governments, somehow it got out. And you won't even know your phone's being hijacked, but everything you're doing can be seen, all your passwords, everything. You have no idea is happening from all that I read. I, of course, did the update, and just go into general settings. Is there a software update? Boom, it's right there, and it tells you it's a security update. I think you want to get that on. And it's not just for the iPhone. It's, I guess, any Apple product. When we look at PAVE, well, you know that now we've got the Senate back. We've got Congress in full sessions. They're talking about what's going to happen with the infrastructure deal, the reconstruction plans that they have. I don't know. I know that they're already talking, hey, we'll raise the taxes on these people, but we'll also give the middle class, we're going to get rid of the Trump deal on SALT and stop that $10,000 limitation on your real estate taxes and mortgage interest, right? And let that have some other number. I don't think any of this passes for a $3.5 trillion plan, and I think you'll see that. So they had to throw how they do some of the funding. I looked at the funding. I still can't figure out where it all comes from, even with what they've come up with. In XLI, very oversold, down to the lower band again. You hit it, you rallied up to a resistance. Remember, when you're underneath the 100, rallying back to its resistance point, let's assume it rallies now. The next resistance is that number in the 18. Get over 103.48. You can negate this downtrend that you have, but it would not start an uptrend. Why? Because the most you can do if you soar it up, you'd have a lower low and a higher high in an oversold market. In XSD, higher lows, higher highs, but you lost the embedded reading right back over, watch this, right here, 77.01, and that was on Friday. You got it back today. When's the only time you can get it back? The day after you lose it, and it did that. So this was one of those quick ins and outs. I think traders are going to want to see tomorrow the core CPI, and then they'll make a decision. PODX, I turned out to be at least right on this, that when it was bouncing, I thought it would run into the trouble here and come back. It was interesting today because there was a question on Bloomberg. Why is Canada's pot stocks and their stock market do so much better than the American? Interesting question. XHB, the home builders. Well, interest rates, if they're going up, you got to be a bit careful here. Lower highs, lower lows. Everything I'm reading says that we'll see slower home price growth next year, but that doesn't mean that prices are going down. There's a pace at which it jumps, which has been dramatic. It's outperformed the stock market and everything else, but it gets too high, and I think that's what they're talking about. In any case, even if you fell hard, I'd look for major support, 74.71, 74.93. You're already at a reading that's oversold. I'll let somebody else carry that. By the way, in this, if you were to not take out 75.84 and just get back over 77.70, you could have a pattern of higher lows than higher highs, looking for 79.58 out of an oversold condition. In the energy sector, it's difficult to be short when you're watching energy every day just running to the upside. A mixture, in my opinion, of obviously the natural event from Hurricane Ida, but then the other part of it is COVID numbers starting to fall all over the world. That doesn't mean that the hospitals aren't full. It doesn't mean that it's terrible and not terrible in some zones. It is. But when you take the scope of it, it seems to be pulling back. Even China just got in one of its regions another serious infection rate. So they're going to have to do something. This thing just doesn't die off. So you've got to watch it, and then you got to watch Mu. You know what that is? That's the next variant that they're watching already. EFA, so the emerging markets, big down day there. Now, one of the things I look for from an outside day down is you can set up bear traps. Why bearish? Outside day down. But if you take out Friday's high of 81.98, which you did not do today, you got to 96, but if it takes it out tomorrow, beyond that, I don't care. Then it's a bear trap, and I think you'll be looking possibly at a good run at that upper Bollinger Band. I'd be wrong if it got up there and then took out the lows of yesterday, but you have to prove that first. Look where gold's fighting. Look at the 18-day average. You lost all the bullishness, you got oversold, you fell right back into that 18-day average zone, and that's where you're at. It fought a battle that it did terrible with, and you heard me say that here. It had a shot to be great. It lost it. Doesn't mean it can't build on this again, but there's nothing to do. You got the short-term trend up, you've got momentum down, and you've got the bias down since you're under the 18-day average. And let's assume you get back over 168.34, the red line, which is the 18-day average. You still got these other battlegrounds to fight. In the gold miners, still looking bearish to me. Lower highs, lower lows, but if the market clears 32.49, I don't think the pros are going to want to be short anymore. What you really did is you just fell back to the 18-day average and didn't go anywhere. You pulled out all the fluff in the market, and that's how I'm reading it. TLT, you're stuck at the 18-day average of closes. The market's very comfortable at 133 temporarily, 1.33 in the 10-year note, and that seems to be where it's stuck for a little bit. And in foreign currencies, well, as bearish as the chart is, it's not under the 18-day average. All it did is fall back from the Bollinger Band to support of the 18-day average and didn't go anywhere. You know, as I talk all this to you, you might want to learn about these indicators, and we have 2 volumes that we put together with our good friends from Modern Trader. And what they did is we put this into volumes 1 and 2, a PDF. You can print it out if you want. You can read it as a PDF, but it covers all these different parts of the market with graphics on them, great explanations, helps you understand what we're all talking about and what it's based on. So if you'd like to get this, it's free. All you need to do is go to our website, www.iraepstein.com. under the word free offer. You can also call our staff. We have other offerings. They'll get everything out to you right away, literally as you're on the phone with them. I'm Ira. You have a great day, and I will talk to you tomorrow.